Hello everyone, I am the big boss. Now, take a calculator, a book, sit down on a quiet place. Let me teach you something. Let me teach you something. Solving the market algorithm mathematically. We are solving the market algo mathematically. Remember, the only way you are going to track the banks is by tracking their data. How do you track their data? Using candles. Now, remember, candles give you information. So, use that information provided in the candles to track how the big institutions, how the banks, how they are trading. Nowadays you can trade by candles alone and expect to make money. It's hard. Now, this is date 9. This was on Thursday. Yeah, this was on a Thursday last week, 9th July. I'm using this price action. Then I will open a 4-hour chart for Thursday. Where is Thursday? 4-hour Thursday, date 9. So it's this one. I want date 9. Any date 13. No. 4-hour chart. So this tab, I have the 1 minute chart for that day, for date 9. Then on this side I have the 4-hour chart for Thursday. Now check. I have this. Where is Thursday? Thursday is date 9. So I have this 4. Date 9 there. Date 9, yes. July, and this is date 9 July. Now I want us now to focus now. We are using this 4-hour candle to track the market. Remember, the 4 a.m. 4-hour candle is the most important 4-hour candle of the daily candle. The 4 a.m. 4-hour candle will help you estimate the highest point of the day, the lowest point of the day, where the banks are going to enter intraday. The 4-hour candle, the 4 a.m. 4-hour candle will give you all that information. The 4 a.m. 4-hour candle. Like here, it has closed. We will do with this one, and I will tell you how you will trade using this. We will analyze today. This is 8 a.m. Yeah, this is 4 a.m. 4-hour candle. This is a beginning of a 4-hour candle, so it has opened. So what do? We will analyze today's trading. I will leave it to the video and you will come up later to check. But for now, I want us to learn. For a.m. 4-hour candle. Remember, when you click the candle, a candle has 4 key levels: opening price, highest point, lowest point, and the close. I'm not trying to teach you parts of Listen. Everyone knows open, close, high, and close. Everyone knows that. But you know that most of them, they just think this is part of a candle. No. Okay, let me give you a simple analogy to trade. Go to the opening price of a 4-hour candle. Let's say it's 4 a.m. 4-hour candle. It has closed. The opening price. If market taps the opening price of a 4-hour candle, move to 1 minute and expect reaction there. That is a strategy for scalpers. The 4 a.m. the 4-hour candle has closed. Its highest price, mark there. As a scalper, watch there. That is where the market is going to react. After it takes out a 4-hour candle high, it either reverses with high speed or moves with high speed. Remember, all the time frames move the same way. The difference is the speed. Speed. Even the news are not here to manipulate the market. No, news move the same way they are supposed to move, but the difference is speed. News, they just accelerate speed. High speed. But people think, oh, news is, it's not manipulation. They are news, they always align with the market. You saw yesterday Iran, they closed the Strait of Hormuz. Then what happened? Speed, 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 speed. Even before they closed the Strait of Hormuz, I knew the market will sell. See, this is Trump manipulation. Trump, around 5:48 on Friday, Trump made a tweet. He made a tweet, manipulate market speed. Boom. This was a banking engagement. This was a banking level here. This one. This was my banking level. Trump make a tweet. Boom. Now, I have seen this kind of, like those people who trade patterns. This always happens on Friday. Then Monday market always opens with a down gap. Irregardless of of any shitty news, market was supposed to open with a down gap. But that is not what we are going to learn today. But when you see there is news, the first 1 minute candle of the day always controls the day. See, the first 1 minute candle of the day here, and then tap. Those people who have been following me on TikTok, I told them, if market opens with a down gap, sell. If the market opens with an up gap, buy. Because as long as the Strait of Hormuz has been closed, market opens with a down gap. Because it's affecting gold. Why? When they close the Strait of Hormuz, this is what happens. There is no transportation of oil to smear gold. So gold will be affected. That's why it opened with a selling market. So there is no enough oil to smear gold. So that means gold will sell. That is basically what happened. Now let's go to the market now and solve this market. And I teach you now solving the market algorithmically using pure maths. This is pure knowledge. Pure knowledge. My friend, I see people trying to rush to learn the market. Don't try. Even if, just imagine you're a profitable trader and you don't have the market knowledge. Me, some people, like, you gotta have the market knowledge. Even if you're a profitable trader and you find traders are somewhere talking and you can open your mouth and say something, you're not just there, I'm a profitable trader but I only know my strategy. You need to have the market knowledge. The market knowledge. And you guys, you will learn on how to invest on yourself. Learn how to invest in yourself. Now. Let's learn. I was telling you, when you are calculating price, when you want to solve the market mathematically, and you want to track the bank algorithm using pure maths, there are key things you should be knowing: opening price, closing price, highest point, lowest point. Those key points of a candle, that range, then you're estimating where the next candle will be. Remember, every 4 candle high and low is predetermined. They know it. This high will form at exactly this time, and this low, this 4 candle, will form at this exact time at this price level. So if they say, okay, today we will use the first 1 minute candle of a 1 hour candle open to manipulate price, there is nothing which is going to stop that. Trust me, there is nothing which is going to stop that. And you have to start opening your eyes. Time and price, how do they correlate? If a 1 hour if the previous 4 hour candle as formed is high at exactly 7:19, let's say it's a 7 a.m. 1 hour candle, 7:19 there's formed high. Now count from there. What will happen at exactly 8:17? I was saying 7:17 a.m. market forms low. What will happen at the same time? The next 1 hour candle, 8:17. That's how you start learning and start navigating around the market. Now let's learn. First, when you see a candle, first think about its midpoint, because it's a key level, it's pivot level. As a beginner, that's where you start. Stop trying to be big boss. I don't like that. Stop trying to be me. Think, I have the pivot point. If market taps pivot point, I will risk pivot point of a 4 hour candle, and market is selling, over selling candle. Market should tap there and continue selling. So if market taps your pivot point, you sell, and then you put your entry, you put your stop loss, let's say 60 pips above your pivot point. So if your stop loss is hit, you are 100% sure you were wrong, and you won't try to re-enter the market again. That's how you navigate it. I haven't said when you see a pivot point you run and sell. There is a systematic way to do that, and that will require you to go to the market and do the work. Learn, learn. Because I've been seeing people trying to be me in us, and you have just watched one video. Relax. I am here to teach you the right way and the best way I know. Now, when you see a 4-hour candle, this is what you do. First, think about the range. Remember, we are using the 4 a.m. 4-hour candle to handle the daily candle if you are intraday trader. Now, I already gave you this formula. I think I have posted it on YouTube, TikTok. So most of the people, like, I think they saw the video, and now I want to give you a real example. I will teach everything in start. You don't need to go and find it. You don't need to go and find it. I'm teaching you from the start. So this is what you do. Let me close my shunt so that I can. You multiply that. Okay. I'm trying. Okay. First, you have to calculate the range. Let me write it here. Using the 4-hour candle, this is the formula now, how you go about it. Now I'm showing you how to calculate the highest level of the day and the lowest level of the day. If they get violated, now banks, they enter into something we call, like, let's say the big banks, the small banks, they fight for 15 minutes maximum, and then there is a continuation move. That is on the lower side, the lowest point. But on the higher side, if it breaks, it will retest immediately and buy. But on the lower side, they will enter into a fight of big banks trying to wrestle with the small banks and the retail traders. Now, let's learn this. I will come here. Range. I've said range is equal to the 4 a.m. 4-hour candle. Now you will do by subtracting high minus low. Okay. Nimefanya nini? What have I done? I've said the range. We are using the 4 a.m. 4-hour candle. Then you do by taking high minus low. That way. Then the 4 a.m. 4-hour candle, after it closed, you're taking its high minus its low. And the range, we will abbreviate it SR. Now the range I will be calling range R. So to calculate the estimated range, now there is something we call estimated range. Estimated range, you will take R for range, multiply. Sasa where do I multiply? What do I multiply with? Multiplication. Does PC have a multiplication sign? I'm trying to find where the multiplication is. Multiplication. You want to mean I will use comma instead of multiplication. Multiplication means I'm using comma to mean you multiply by the implied volatility. No. Implied volatility or current volatility, any. I will forget. Let me clock. So to multiply that with current volatility, that will get the estimated range. Now I want us to go slowly. Now first we will do the first two. This one here. Take high minus low to get the range. The 4 AM 4 candle. If you check here, just zoom your screen. You will see all this data inside the cursor. For it's written there on the upper side, the 4 AM, that candle. The second, I don't care the time zone where you are in. I'm using the Kenyan time zone. You can call it if you can use the after a daily candle has opened, wherever you are in, the second 4-hour candle to open and close. We are using that. You can see the daily candle opened here, and this is the second 4-hour candle. It's the same. The daily candle opens at the same time everywhere. The difference is just the time zone. Yeah. Now, you just have to wait for a new daily candle to open, and then the second 4-hour candle to form. We are using that. Now take a pen and a book. Zoom your screen, and I want you to do with me everything. Now I will take high. I haven't analyzed this market. Actually, we will do for 2 days. 4082.63 minus 4054.13. 4082.63 minus 4054.13. I'm getting 28.5. So let me note it down. I have a book on my side because I won't write everything on the screen. Okay, so I'm getting 28.5. Let me write there so that I don't forget. 28.5. Now you take that, you multiply by the implied volatility, all the current volatility. How do you calculate the current volatility or the implied volatility? That is the assignment I'm going to give you. Now give me like 30 seconds. I calculate that implied volatility, the current volatility. Let me calculate it. La, 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 la. I'm getting 0.3435. Now I don't know if I'm allowed to say this kind of things on YouTube. So but I will give you an insight on how to do that by the end of the video, because I don't know if I'm supposed to. So I will just have to put a pin on that. Now, the implied volatility is 0.3435. Now, it's simple. Before I give you the insight on how to do it, because I don't want you, I can't be breastfeeding you. I need you to go in your chart, think, how did this guy get 0.3435 using the opening price, the closing price, the highest level and the lowest level of the day of that 4-hour candle? That is basically what I have used to calculate the current market volatility, or when you want to call it the implied volatility. So I want you to go and do that. By the end of the video, I'm going to show you how. But before you reach there, can you think for yourself? Can you think for yourself? I need you to sit, pause the video, try to see how is this guy getting this 0.3435 using the 4 a.m. 4-hour candle. How did I get that? That is what I want you to do. That is what I want you to do. After you do that, I will be happy. I will be very happy. And after you calculate, I have said pause the video, try to see how did I get that. It's not even about me, it's about you. When you try to calculate the high using the open closing price alone, and now you're trying to deliver your own math formulas to navigate around the market, that's how you are opening your brain up. You are opening your brain from the mere learning of candles only. You are opening your brain, bro. And that is what I'm doing. I told you, invest in yourself early. You know that there are guys who are learning from me, who are 18, 20s. Invest your time. Invest your time in learning this shit if you are serious about it. The other guys at 50, 40, 30 were still watching me. Invest your time to learn this. Learn to invest in yourself. I did that, and I am the big boss. Invest your time. And submit to it. Submit to that. Submit to that. Because you see, I see some people trying to come to my private mentorship with this kind of mind of, bro, I want to do this in 2 weeks. I've been here the longest. Nah, relax. Don't try to come me don't try to come to where I am with those unnecessary pressure. It's not my fault. Come slowly. Like if you don't, you know you don't have the patience, don't try to find me. Learn here on YouTube. I will post everything here over time. Learn here. And here on YouTube is where I'm going to test your patience the most. The most. Because I'm teaching you stuff from right away from my head. So those asking, do you have books, PDFs? I don't have. I'm teaching straight from my brain. Here. Everything is here. And if I have something written down, it's on a hard book. Like this one. That is what I'm teaching it. Learn slowly. Give yourself time. This is a new concept because a lot of traders are not even aware. Like, if they are very few. Who knows how to track this? Who knows how to navigate and try to use pure math to track this algorithm? Because you see people saying market is pure candles is data from the banks. And then why are you trying to check patterns in the market and you already have the data on how you can trace the algorithm? Sit, think, meditate. Think. Liquidity levels. You see people saying liquidity price level can be here, down, equals high. No, nothing like that, bruh. The liquidity point, it can be even inside a 4-hour candle. Inside there. But you're not seeing it. It doesn't. It can be even there might be not even a swing highs and swing lows, but the liquidity zone is there. Where you think the liquidity is not there, it is usually there. Where you think, oh, equal highs, equal lows, there is liquidity, most of the time, there are banks that have not even put their orders there. They are not even trying to hunt your stop loss. It's not there. Liquidity points in the market, you can't see them with naked eyes. You can't see them with naked eyes. You gotta have to do something. So I have said the current market volatility of that 4-hour candle is 0.3435. So go to that 4-hour candle before the end of the video. Pause it. Other people, why are you rushing? Some people are just rushing here. Bro, do fast, do me fast, man. I want to learn this and make money and go. Relax. We are the big boss. And me as the big boss, I am patient. I don't know if there is anyone. I don't know. I think I'm the most patient person I know. And you have to be that. Be the most patient person you know, because you are a trader. You gotta be the most patient person you know. If you know someone around you who is more patient than you are, you're not supposed to be a trader. Patient is what I teach. About psychology, I don't give a fuck about that. Go to the market. It will shit you up till you learn psychology. Psychology, risk management, you are not going to know that by just, I've read a psychology book, I have read the trading in the zone, I have traded this, I have learned this, I have read the psychology of money, I have read that, 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 I have read this book so it can help me with psychology. I have paid this person to teach me and guide me on psychology. Yeah, you will do all that. But if you don't get into the market and listen to what I'm saying, the only thing you need is small patience and go to the market so that you can get used to the road. You know, you are learning YouTube from for you are learning forex from YouTube. It's like you are learning driving from YouTube and you are going to to a highway and you are driving with the highest speed. Of course, you will get an accident. Think you can't learn driving on a YouTube and go to the super Thika highway. No, or any highway you are in and you're trying to speed up. No. So if you learn driving from YouTube and you have a car, you have to go to an open field where there are no cars. Now that is the demo account. Where there is no cars, there is nothing, and take your time to learn driving on an open field. But you guys, you learn forex from YouTube, you go fund real money, and then you are full margin. Like, are you mad? Are you mad? Take it that way. You can learn driving from YouTube and go to somewhere like a highway, a high busy highway, and then you are on your high speed. There is no way you are not going to get an accident. Actually, you will die. That's why this forex kills a lot of people mentally. You think dying is about taking your soul out of your body? Nah. Bruh. This shit can kill you well. Like when you are still alive, man. So, let's go on. Let's go on. Let's go on with studying. Because I am the big boss. So, guy. Hata simulisahau. Okay. Let's go on. Let's go on now. I'm dead serious now. Take the implied volatility, which is 28.5. No, the range we calculated high minus low. We got 28.5, if you can remember. Then implied volatility, I have told you, is 0.3435. So ER, estimated range, is, I will not write the ER, I will just write the ER, the estimated range. ER is equals to, I will take your calculator. Take your calculator. 28.5. You multiply this by 0.3435. I'm getting 9.7. 9.78975. That is the ER. 9 point. Aye? Oh yeah. That 9.7897. That is the estimated range. There. The ER. The ER. Then from there, you take the opening price plus estimated range to get, or minus. Okay. Now, to get the banking level, or what you call the Z price, investor, just a little bit. I do this for you. La 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 So we have gotten the ER. So to calculate the Z price or the banking level Z, you take, because you have to have the upper side and the downside, the highest level of the day and the lowest level of the day where the market is going to react from. Then this will be, you will take 28, you will take the opening price, opening price plus or minus the ER, that is the estimated range, the ER. You will get no it's supposed to be here. You will get something we call banking level, stroke price level Z price for abbreviation, the Z price. Now let me put it there. That is the Z price. What else should we be going to learn? Then from there you will take the Z price. Remember, you are taking the estimated range ER. We have already done that. We have already gotten our ER as 9.7897. We are using this candle, don't forget. There is a price level now, we are getting that. Now we go to the other side. You get the Z price. After now you get the Z price. Z price plus R, the range, multiply, we will say, we will use abbreviation, comma, 0.58. There. 0.58. Now here you get the maximum selling point and highest point. The boy is starting. I'm starting to get tired. I'm getting highest, high and low of the day. I have said if that market tries to break the lowest point, it enters into something we call small and big banks fight, and it's a 15 minutes something and then continuation to the downside. I will show you on here right away. On the upper side, it will tap sell. If it breaks, it will retest immediately, and now we enter into something we call a super buy day. If it breaks down, it will be a abnormal sell day. That is basically what happens. Now I will do this. Now let's calculate the price level Z. Opening price plus the banking opening price plus ER, we will get that price level. And now we will go to the chart and market. Now this is what you do. If that 4-hour candle is bearish, you add. If that 4-hour candle is bearish, you subtract. If that 4-hour candle is bullish, you add. For this example, this is a bearish 4-hour candle. So I'll take 4073.65 minus 9.7887. I'm getting 4063. So that is my Z price. So I'll come here. This is the Z price. 4063. 4063. Where is 4063? That is date 10. This is the date 9. Date 9 is here. Yeah, this is the date 9. 4063 here. 4063.86 there. That is the Z price. We have calculated it with you. Just check. Tap buy. Let's start from here. The Z price. Tap buy. Tap buy. Market, come back again. Tap buy. Breakout to the downside. Tap sell. Tap sell. And then this is breaking up to the upper side. And then continuation trade. Are you seeing what I'm trying to teach you now? That is the power of the Z price. The Z banking level. Now, let's go to the highest point of the day. I have told you if it breaks the highest point of the day, market enters into something we call the super buy day and the super buy day. On it tries to close above it, it will retest and boom. Or if it's forming the high of the day, it will tap and sell immediately. Now we have the Z level. We have the range. Range we got 28.5. Remember, high minus low over 4-hour candle. This candle, this one. We got 28.5. Remember that is the range. So we take the range, we multiply by 0.58. Range was 28.5. Then I will multiply by 0.58. I'm getting 16. I'm getting 16.53. I'm getting 16.53 as the range. So I have told you will take the Z price plus range like you will take the Z price plus R range multiplied by 0.8 to get the highest level and the lowest level now here. This thing is going to require your time. This shit is going to require your time. A lot of time. Now, I'm getting 16.53. So I'll come here, the Z price was 4063 was 87, but even 77 is okay. There is no big difference. I will add 4063, which is my Z price, 0.77. I'm getting 4080.3. So let's go and mark the highest level of the day, 4087. $48.3. Leave it there. This is what I want you to see. That 4 candle closed where? Here, around here. So check. This is the highest level of the day. Market broke out. Now check. Check. Now I want you to check. After this market broke out that level, that banking level, it did what? It retested 4080. And then after it retested that level, I have told you there is where the banks they enter. If they break out, it means market enters into a super buy day. That's why you see after the breakout, it's when it tapped that banking level, activating more buys, and then see this big candle. Boom! And it is always timed. They used the first 1 minute candle of 9 a.m. That is how they are even using time to do it. Why? Why the first 1 minute candle of 9 a.m.? Why did this happen? Not it didn't happen 8:59. It didn't happen. It had to wait for the first 1 minute candle of 9 a.m. Why? That is the question you should be asking yourself. Now, if I was to trade reversal after I see this, I will wait. I will not trade again. This is why I don't spend much time on the chart. I will just wait for the 5 p.m. Now check 5 p.m. The 5 p.m. is when I'm just waiting for the reversal because the market has broken the maximum buy point. So the only thing which can reverse this price is 5 p.m. candle. Nothing else. 5 p.m. Let's go to and check 5 p.m. 18. 5 p.m. never reversed price. How? Like, this is crazy. I'm surprised. 5 p.m. 5 p.m. 5 p.m. never reversed price. 5 p.m. is here. Here. Okay. Let's wait and see. The highest point of 5 p.m. is here. The first 10 minutes. Remember I've been teaching you about the first 10 minutes of 5 p.m. First 10 minutes of 5 p.m. I've been teaching you. About the first 1 minute candle of 5 p.m. and the first 10 minutes of 5 p.m. The first 10 minutes of 5 p.m. high and the market doing what? Dumping down. The highest point was formed during the 5 p.m. This is just manipulation, but the true reversal is happening on 5 p.m. The good one, then market dumping this way. Are you seeing that? This is why that's how the market moves. Let's analyze for today. Where's today? If I want to trade today, I will mark where. Today is one. Let me just cancel. Let me mark this bank Kali. I'm not using 4060. My banking level is about 4058. 4058 dot 7 there. Then down and then tap sell the midpoint of that level. It's not random, bruh. Can you see? If I was not making this video, I could take this sell, break out the zero level, back again here, tap to the exact point, sell. Now I just got, today is on date 13th July. Just go and follow these price levels to trade. Follow them. I will mark here, down here, 40, 40, 45. High chances markets will buy from that level because I'm not seeing possible breakouts from there. This is not what I have taught you, this is something else. I can trade this market a million ways, bruh. Not a million ways though, but I can trade it how I want. Now, how about this? I'm tired. I am tired, so we will meet on the next one. For today, that is the setup. That is the setup. It's going down. Wait, it has to come to 40, 45. It's a must. It's within a banking level, the zero level. If I want, that is where it will react. You can see even this reaction from there, reaction from there. And now they will pump more down to here. This is the liquidity zone point here, 40, 55. You see there are those who trade liquidity take out. After this is taken out, you have down part here. So me, I will buy down here. But there is a process. It will depend time and the speed it is tapping the banking level. Low speed, buy. High speed, wait for an inside candle and trade. You get in that, though there is a possibility it may fail to come there. I don't know. Will it come? But yeah, I expected it to go to be the highest level, come, retest 0.5, and then boom, down. And you can see my level 0.5, the number, the highest level is matching with, see this manipulation week for Friday. I was not even aware. I have just compressed the chart and saw that it has to come here, and then after it comes here, then boom, probably, you know, a lot of traders, they want to trade the mid. Oh, I'm waiting for the market to come to the midpoint of this gap. Or it will go where it might decide to go down twice. But remember, the Strait of Hormuz is closed, so just don't try to. If you're buying gold, take care of yourself. Yeah, just take care of your damn self. 4031, the other banking level, and see you on the other side, guys.